What's going on, y'all? Brandon with Selling with the Snyder Group here, and today, oh my God, the real estate market is crashing. Before we get there, I want you to do a couple of things. If you like real estate content, looking for updates in your market area or any other across the country, please like and subscribe below. It keeps us going, keeps our content fresh. So we're here, and the market is crashing for Zillow. You're like, well, wait, Brandon, what are you talking about? Zillow, our favorite neighborhood-friendly real estate website, went out this year, bought billions of dollars in property. And most recently, they came out and said, hey, we spent too much money. We're going to back off of this whole iBuying thing. So if you don't know what an iBuyer is an institutional buyer that comes in, they will purchase your house cash, very favorable terms, and then they will close pretty quickly, and you sell your house, they go relist it. Well, Zillow this year, among other home buyers, iBuyers as well, came out, bought all this property at over market value, and then came back and put it on the market even higher. So if you watched our recent video a few weeks ago, I was talking about how this was bad for the market and how it was potentially going to implode. Well, spoiler alert, it did. Zillow came out and said, hey, we're not buying any more properties this year. We're probably not going to buy anything in the next year. They laid off a quarter of their staff. They imploded, just like I said they would. There's a few key takeaways from here as to why this could potentially crash the market. Spoiler alert, it's not going to, because there's still a short supply on the market for homes. But there's a few things to unpack here about Zillow, what they did, and exactly why it's important to understand that the market is not going anywhere anytime soon. So it's the end of November, or the middle of November right now, and the Feds met in October. And normally when the Feds meet, they make a couple of decisions. They change interest rates, they decide what they're going to do with the market, they're going to see the inflation and see what's going on there. The Feds met, and the Feds did not drastically change the rates. Rates are going to continue to slowly climb back up to normalcy, which is something we're hearing a lot of in the market right now. But that's not going away in the next 6 months or so. You're still going to see low threes, and there's still high twos right now. You got to be really qualified for those rates, but there's still low threes, mid threes. The only time you're seeing high threes, low fours is down payment assistance, bad credit, things like that. So we're talking about the Feds that came out and said, hey, we're not really touching anything right now. Okay, the market's not crashing because of that. If the market was going to crash, we would see some drastic change in rates. There's still a huge problem in supply. So this is point number 2. We're talking about supply here. This is something that happened the latter end of 2020 going into this year, is that we don't have enough supply in the market, in any market in general, to meet the demand of home buyers. As long as rates stay the way they are, they're going to continue push people into home buying. People staying at home has made them realize, hey, I need a better setup. I need to be in a bigger house. I got families merging in, things like that. So the demand is not matching the supply. People still need houses. So when you look at 2008 versus now, that's been the biggest comparison. Oh my God, the real estate market's going to crash like it did in 2008. Well, historically, you had too much supply. You had so many people upside down on their houses, there were short sales, foreclosures, etc. Well, now that's not the case. End of 2020, we had so many people say, oh, there's going to be so many forbearances and foreclosures. That didn't happen. It was projected to happen, but it didn't, because the economy changed. And the economy met the problem that was at hand, which was, okay, everybody's at home. They're not spending money. How do we get people to spend money? They sent a stimulus check. They sent multiple stimulus checks, right? That got people spending money, circulating money in the economy. People's jobs, some people were laid off. A lot of people were laid off early on in COVID, and then companies rebounded. Right? So that was another thing as well. We have this huge economy that's, in certain markets it struggles, but for the most part, our national economy kind of is just this revolving cycle, like it goes up and down and up and down, but there's no recession, no depression coming. This is not 2008. So I bring these things up because Zillow came out and said, hey, we're done buying houses. We screwed up. We're not gonna spend any more money on houses. We're laying off a quarter of our staff. And of course, I'm sure someone sitting at home who's looking at Zillow says, oh my God, the real estate market's crashing. It's not. Zillow made a calculated, or let's say uncalculated risk. They went and did something that was not well advised. If you ask any real estate agent or any real estate professional, mortgage lender, anyone, they'll say, hey, don't inflate the prices. That's how you cause problems. So Zillow went out and did that. They inflated the prices. They started selling the homes a lot higher and realized, hey, we couldn't sell them. There's a couple of things there. Zillow, Open Door, any of these iBuyers, if they buy this house and they go out and sell it immediately, they have to follow FHA guidelines. FHA buyers cannot buy those houses. So while that is creating more supply on the market, the demand isn't there for those houses because there's guidelines that they have to meet. So you can only have a conventional buyer, you can only have a cash buyer, and the prices are inflated. So those houses were sitting on the market longer. Zillow came out and said they had $250 million in real estate in Houston alone that is just sitting there. They can't sell it. Well, Brandon, doesn't that mean that there's too much supply and not enough demand? No, Zillow screwed up. So I'll leave you with this. This has been a huge issue in the market. These institutional buyers that want to corner the market have come in and done these things, and it's been incredibly hard on your average real estate agent, your average home seller, because they're bombarded with so much different stuff going on, and then they get hit with fees and things like that that just make it a miserable experience. Now this is kind of getting out of the, hey, Zillow's done doing this. Knock has mentioned that they're slowing down their process. The institutional buyers aren't the bad thing. It's that Zillow came in and did what they did. So I will leave you with this. If you're looking to sell a home, don't sell it to Zillow. They're not buying it anyway. Don't sell it to Open Door. Go talk to a trusted real estate professional about selling your home for top dollar in the least amount of time possible. I don't care if it's me. Don't care if it's anybody else. I can connect you with the right people no matter what part of the country you're in. But please take this information. Please don't feel like, hey, the market's going to crash. I shouldn't sell my house. I'm worried about my job, because this is not 2008. And the data shows us that natural appreciation will continue to take place at a rate of 3 to 5% depending on the market that you're in. And your house will appreciate, but also you need to get in on the next house. That if you want to upsize or you want to downsize, you need to buy the next house before that appreciation takes place. Your average home price in Houston is $330,000 or somewhere around there. Your average home price in other parts across the country is $800,000. So if you're looking to buy or sell a house right now, now is the time to do it, because homes will just naturally appreciate. You don't want to miss out on the next step. So thank you so much for joining me today. If you have any questions about homes in the greater Houston area or anywhere across the country, please contact us below and we can get you connected with a real estate professional that we trust and know.